Hey everyone, happy Thursday, November 7th. It's a little bit after 1 o'clock on the West Coast, and it's time for another market update. A little bit later than I like to get this video out normally, but today is Fed Day. So I wanted to make sure we got that Fed announcement in this data so you guys could take a look and see what happened. So getting right into that, the Fed cut rates by a quarter of a point. This is what the markets expected. This had already been built into everything. So it's not like mortgage rates drop by a quarter point or anything like that happened today. Keep in mind, mortgage rates are not directly affected by the Fed. This is more about HELOCs, money market accounts, things like that. But overall, good that they cut. Not the half point that they cut last meeting, but still better than a surprise, no cut, hold. And then afterwards, Fed Chair Powell gives a press conference. They release some data. That's all been pretty well received by the markets. No real surprises there. A lot of talk about it, still some work to do on inflation, but it's coming under control, about the job market, things like that. So again, good that there was no negative surprises, but not a huge effect since the markets are, we're already very, very sure this is what was going to happen today. Next thing, I'm not sure if everybody's aware, but there was a presidential election this week. And like we talked about last week, the market started already building in a President elect Trump victory, which ended up being the case. And rates started going up. And the reason that is because he's spoken a lot about raising tariffs, trade tariffs, and raising tariffs. Most economists all agree that that would be inflationary. And we know that inflation is an enemy of mortgage rates. So we don't want any more new inflation. So that's why the markets, mortgage rates started going up when they kind of started figuring out he was probably going to be the victor. That night when before the news networks had even declared him, the market started factoring in him winning as well. Waking up yesterday, we had a good stock market rally, but the mortgage bond market and U.S. Treasury yields and things like that all had bad days. So mortgage rates had a bad day. Today, it looks like things have kind of like evened out. We're getting some positive movement now off of it. So hopefully that was just a lot of leftover election anxiety, not knowing where things are going to go. And let's hope that this tariff idea goes away. But like I said, it's good to get past this election. Hopefully, no more drama. At least for 4 years, no more drama caused by a presidential election. But it'll be interesting to see how the tariff stuff goes, inflation, and all that, and how that affects us. Next thing, very big one. Going back to last Friday, we got the October BLS jobs report. As I say here, jobs dropped, but the unemployment rate stayed the same. Taking a closer look, 113,000 jobs were estimated to be created. It only came up with 12,000 jobs. They also made a big negative revision of 112,000 jobs over the last 2 months. It'd been really nice if these numbers came in accurate to begin with, because we know the September number really hurt us. And look how this August number is only 78K. That would have been a very big help for us, and rates would have gone lower. But it is how these reports go now. They report these numbers, and then a little bit later they tell us they got them wrong and they're too high. But by that point, the damage has already been kind of done on the mortgage rate side. Other thing about this, they have this birth death model where they're trying to estimate how many new jobs are created based off new businesses starting and old businesses closing. So they came at plus 368,000 birth death model. The non-seasonally adjusted number was minus 148. The ADP, which was a higher number a couple days before this, only came out 4,000 birth death model created. So you take this seasonal adjustment away, and we're negative 136,000 jobs created. So it's again, the math the BLS does, these negative revisions, it's all very suspect. But again, this is the markets react to this, the Fed looks at this, so this is what we got to pay attention to. As you can see, government was up 40,000 jobs, healthcare up 51K, which are pretty standard. Leisure hospitality down 4K. That was a big factor last year, a little bit more so. And then the second part, the household survey. So that first part is, the headline survey they get from data, things like that, payroll. Household surveys where they actually call people. This is where the unemployment rate comes from. This came in at 4.1% unchanged. But in actuality, look at the numbers. There's negative 368,000 jobs, less jobs. But because the labor force went down as well, by people not applying for unemployment anymore, not looking for a job anymore after, I think, 4 weeks. So that, made the participation rate drop. And so even though jobs dropped so much, the numbers end up staying the same. So we stayed at this 4.1. Which again is a little misleading, because obviously if we lost 368,000 jobs, it's not like a very strong report, but that unemployment number that everybody reports stayed at 4.1. So overall, the markets did not react too much to this report. It was good to see. Again, we didn't have those blowout numbers, but everybody was basically waiting on this Fed announcement and this election, the election to resolve itself. So good we didn't have a crazy one. Crazy that, a little bit weird that it was only 12,000 jobs, but keep in mind hurricanes going on during the month. There was some strikes going on, so maybe that had an effect on the numbers. But overall, it would have been nice to see a little bit more of a positive effect, off such a low number. But that unemployment number, staying the same is kind of what hurt us. Next thing we got, this just today, we got initial jobless claims. Those came at 221,000, which was basically the estimate. Continuing job claims, people continuing to be on unemployment, that ticked up high. I think it's the highest since early 2021. So that kind of shows that, maybe they're not laying off people off, but once you do get laid off, people are having a hard time finding a new job. So something to keep an eye on, since that is so important when we're looking to see job numbers. So where does that leave us? Last week we were at 7.08 was the average conventional. Yesterday I think we got up to 7.13, but then today, after the markets kind of settled down a little bit, we dropped down to 6.98 and maybe a little bit lower since that Fed announcement. So good to see them coming back below that 7 number. No one wants to hear that 7 number. We want to get, I want a 5 in front of it. So good to see that it's at least started on its way back down. So what do we got coming up? Important dates next, what would that be? Wednesday, we got CPI inflation data. Not as important in PCE, but again, a data set for inflation that the Fed's paying attention to. A couple weeks after that, we get another new PCE. Week after that, we get a new BLS jobs report. And then the Fed, their next meeting is on December 18th, my wife's birthday. So hopefully for my wife's birthday, we get some good rate stuff. So, yeah, so, it's good to get past all this volatility, as far as the election goes. It'll be interesting to see how the data moves forward. Right now, there's some talk maybe the Fed doesn't do anything at the December meeting. So, fingers crossed, we get some good inflation data, we get some weaker jobs data, weaker economic data, and they continue to cut in that December meeting and going into 2025. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, have a great week, everybody. Thanks a lot.